Starting with Annabelle. And Annabelle Wambui is a digital financial literacy trainer, empowering communities and entrepreneurs globally and locally within Kenya. And second on stage is Jay Dwayne. Just a minute, sorry. He is a public speaker and a mental health advocate.
From Ghana.
And a software engineer, also working with the Kenya Revenue Authority. And I'm sure so many of you are dodging the tax bit of it, so we'll ask him more about the tax impact in lending and digital inclusivity. Virtually, we have Oluseye joining all the way from Nigeria. Welcome, Oluseye. I call him Seye. He's the co-founder and chief growth officer at Vendor Credit, a fintech revolutionizing Africa's supply chains and seamless scalable solutions. Next, that is joining us virtually from South Africa, we have Yolanda. Please help me in welcoming her. She is the CEO of Zoe Project and Consulting, an award-winning industrial engineer and a visionary entrepreneur. So I don't want to take much of your time because I know the stomach is calling, and I'll go straight to an all-round question. Because we all know that digital lending and inclusivity is not just a buzzword. We have those that are served, those that are left behind, and those that are not seen completely. So I'll just go straight to maybe first Annabelle. How can digital lending platform use localized marketing and behavioral insights to build trust with underserved borrowers?
Thank you very much. First, I'd like to say that when we talk about the inclusive lending, we need to remember that technology is not only about getting things done, it is also about having us being able to access money when we need it. So when we talk about digital lending, we know that it is able to transform lives and change how things are done. I like talking about practical solutions that we can work on. For example, let's talk about Fuliza, or we talk about, those ones are from Kenya, they know about Fuliza. Or we can even also talk about the Hustler Fund. I know Kenyans don't like the Hustler Fund, but we'll talk about it. Why do I bring these two up? It's because we talk of the person who is down there in the village, the bottom in the pyramid. Assuming you're a wife, your husband has not left you food, and you have children to cook for. You definitely have to go and start borrowing money from your friends. The moment you go and borrow money from your friends, you have to explain why you're borrowing this money. So what I can say about having the digital lending, it is about dignity. Because if I have my Fuliza or I have my Hustler Fund, I will not go and explain to anybody why I need money. I'll just Fuliza. Nobody will know my husband did not give me money. Nobody will know that I didn't have food for today. So first and foremost, when we bring it to that level, we are bringing dignity to the bottom people in our community. The second part of it is that we need to know that when we do the digital borrowing, we need to understand that it is all about building our capacity to build our businesses and our financial independence. And that's why we keep saying that when we talk about the digital lending and digital borrowing, it needs to be brought to a level where people understand, the ones who are lending and the ones who are receiving, that it is all about financial stability and financial future. Thank you very much, Kaiser.
Thank you so much. That's very insightful. And at least we've learned that trust building lens is very essential in the market. So Seye, let's talk about data and the growth virtually. How is vendor credit leveraging embedded finance and supply chain data to unlock credit for SMEs traditionally deemed too risky?
Thank you very much. I hope you can hear me.
Yeah.
Yes, we can.
Okay. Well, thank you very much. So what we're doing at Vendor Credits is to bridge a gap that we've identified that exists. And that's obviously the fact that people that need credit do not have access to credit. In Nigeria, where I'm from, 9 out of 10 people, right? 9 out of 10 businesses are unable to access credit. And I'm sure those statistics are strange to other parts of the continent, as well as SSA as well. So what we are doing at Venture Credit is that we've identified the fact that it seems like businesses speak one language and financial institutions speak a totally different language. So what we're serving as is a digital intermediary, ensuring that the information that the financial institutions need to be able to do a proper assessment of the businesses is provided to them in a format that they can interpret it. But we're taking a step forward, right, by looking at how we can extract more data directly from the sources where these small businesses interact. So, for instance, if you're a merchant on an e-commerce platform like Konga or Jumia or any of the popular ones that exist on the continent, we embed our financial services and our lending services into the platform so that it has technically redefined the way in which businesses access capital. So what we're using embedded finance to do is redefine the customer journey, right, for accessing capital. So instead of a situation where you have to walk as a business, you have to physically be present at a financial institution to access loans, right? It's the reverse that happens. Loan offers are being granted to you off the back of the activity that you're generating on those platforms. If you're a vendor, which is offer goods or services to blue chip and large multinationals and corporates as well, there's a lot of data in there that we're also using to extract to build your financial risk profile and de-risk it in such a way that it becomes attractive for financiers to want to fund your transactions. And that's what we're using embedded finance to do, to basically demystify, extract more information, to demystify and de-risk SMEs so that they become attractive for financial institutions to fund.
Thank you. Thank you so much. That's very compelling. At least it shows that our data is not just used to analyze risk, but also show that we have some opportunities for more. And just to top on that, maybe an example we've spoken about the SME bit. Now, you as an individual, when it comes to like M-Pesa, you wonder, why am I able to get a Fuliza of 1,000 yet I transact every month more than maybe 500,000, and yet someone who is maybe a Mama Mboga somewhere doing almost similar but is able to get more maybe with around maybe 10,000 or 20,000. So with that data being used for opportunities, we are able to be credit scored with the opportunities rather than just for the high risk level. And I think I'll shoot direct to the system bit of it and infrastructure. Jay here, let's bring into your system lens. What infrastructure or policy shifts are needed to support inclusive digital lending at scale, especially for SACCOs and MFIs?
Thank you so much. Hope I'm audible enough. Thank you so much, Razor. So I'm gonna be honest. There's so many bottlenecks now in our government to building structures, yeah? And so also I'd love to be blunt with you. In regard to that question, it's more like we are building skyscrapers on the foundation of bungalows. But then again, we need some fundamentals, definitely. We need, number one is infrastructure shift, and then we need interoperability, because as at now, the government relies on credit agencies as, to get data about credit risk management and all. But then again, it's not out there in the public, there's not that consent. And so it's one of the things that we really need to have a shift on. Then again, we as we had from the amazing lady seated next to me, we need systems that rely on integrity and at the same time they preserve the dignity of the end user. So yeah, that's pretty much.
Thank you for that. That's very compelling. But to just add another extra question on top of that, and it's on the tax bit of it. How does verification systems, public systems like ID verification, tax data, or mobile registries being used safely to integrate into credit scoring without compromising the privacy of the citizens or people?
You're putting me on the top of the gas. Okay, it's okay. So I work in one of the most respected but also most feared organizations in the public sector. That is the KRA. And so there are a number of ways that I can, share. I hope I'll be safe.
You're safe here.
Okay, so done wrong, we can create an Orwellian nightmare. But done right, we can actually unlock financial inclusion to a lot of people in regard to how we handle that data. So some of the ways we handle the sensitive financial data, trying to collaborate with these credit agencies is number one is purpose limitation. So let me give context to purpose limitation. Purpose limitation is basically the credit agency, they definitely have your data, but not all your data. Does it make sense? Hello? So your KRA pin, purpose limitation is more like, is it active or inactive? Is it valid? Yes, it's valid. But they don't gain access to your taxpayer data. Then again, lenders tend to receive signals, not the whole context of your credit history, your transaction payments and everything, because our agency oversees a lot of data from payments each and every place.
Thank you so much for that. That's very insightful, and at least we know that as much as it's absolutely critical, we are protected, and there are some more innovations that you guys are taking forward. And I'll go straight to Yolanda on systems and dignity. I'd love to hear this from you. How are you using process engineering and automation to make digital lending journeys more inclusive and dignified? Thank you so much, Yolanda. That's a strong example that I believe we can also copy-paste all the way from South Africa to other markets. And I know we promised 20 minutes, and we are almost done. Just that I need to maybe just narrow down to a cross-cutting, all-round panel question, just one on AI. And then I'll give maybe an opportunity to one or two questions from the audience, then you can call it off. So let's open these for the full panel. AI is increasingly shaping credit scoring, fraud detection, and customer support. What trends are you seeing, and how can we ensure these tools enhance inclusion rather than deepen exclusion?
Let me go first. Sure. We love AI, and we have to embrace it. Actually, AI will not take our jobs. It's the people who know AI who will take those jobs. So basically, when we are talking about AI and digital lending, first, you as the user, for you to be able to use artificial intelligence, you must know how to prompt it. It's not only writing or asking a question and getting answered. The most important thing about artificial intelligence is that you have to understand how to prompt it, you as the user. And then when we come to the lending part of it, when we talk about the digital lending, how they can use artificial intelligence to get to know the trends and the way you have been managing other lenders before. People who have lended you before, have you been paying? Artificial intelligence can be able to get that information. So to the lenders, they will leverage on artificial intelligence so that they can be able to get to know if you are a viable lendee, if you can be able to be given money. But even for you, to be able to get access information about this lending. Because when you talk about digital lending, we say that it has to be inclusive. It has to be inclusive for everyone. And for it to be inclusive, we must understand that we are moving to the technological side. Just the other day, we were only talking about WhatsApp. Now we have gone to artificial intelligence. So you can imagine, as much as we are talking about digital lending, digital financing, even us as users, how digital are we getting? And that's where we come in with the digital financial literacy and also digital skills. You have to bring yourself to speed. You have to teach the people who are next to you. Most probably, we say our grandmothers may not have a smartphone, but how can you help them even understand the USSD that we are using for them to access these programs? So for us, and I'll talk to the Gen Zs here, you love the phones very much. You guys are always here. But are you using it to learn, or are you just using it to see what's going on in the world? So I would advise that we learn more about AI. Let's get skills. I know the Commonwealth Youth Council has programs. They are teaching youth, and they are free on artificial intelligence. Please let us skill ourselves, and you'll also get the digital financial literacy in those skills. Then we'll be able to say that we have been included in this digital lending. Thank you very much.
Most welcome. Jay?
Thank you so much. Wow, I feel like she's she's taking my point. I don't know how. Yeah, but I'd love to say that at KRA we've learned that using AI and automating processes, it doesn't dehumanize people, but it actually puts back the integrity of humanity in the system. So what does it do? It doesn't. It stops the bureaucracy, but still keeps the relationship. Yeah, and so I feel like also conventionally, in as much as we are called the global South, it's a challenge and to us all to always keep learning. You see, the way we were told earlier by the previous panelists that AI, you need to keep learning. You need to prompt it well so that it keeps learning. I think the same way we need to have that reflection in what we do. So we've re-engineered our taxpayer verification processes, and reduced the time frame from 2 weeks to just a matter of hours. And you know what that does? It preserves the dignity and also still has the credibility of this business person or this taxpayer who wanted to buy land, or a car or anything.
Thank you so much for that. I'm seeing my brother over there almost kicking me out of my panel. So I'll just give it straight to my virtual panelists. Maybe Yolanda, you can keep it short, and then we go to Seye, maybe 1 minute each, and then we can conclude to the audience. Thank you so much. That's powerful, and thanks for the clarity bit of it. Benjamin, I asked only 2 questions.
Yes.
From the audience, kindly.
So you want before 2 questions from them? You want 2 questions?
Yes.
So ladies and gentlemen, she's the one standing between you and your lunch. So if you want to take the 2 questions, you're on your own.
By show of hands, maybe, is there anyone with any questions to the panelists? Maybe 2 people? Great.
Okay. Are you ready? Okay. Could you please get closer a bit so that we just finish it up? Sorry. All right.
Good afternoon, everyone. My name is Patrick. There's a question that you asked in regards to Fuliza. It's a question that I was really interested on getting the response from the guest. The question was why will some other people be transacting more than $1 million on the M-Pesa, yet the Fuliza limit doesn't go past, let's say, 1,000 bob? And there's another person who transacts more or less the amount that the person who transacts more than $1 million has a Fuliza of 20,000, 30,000. I wanted to get what the reason contributing to that might be, more or less from the perspective of Annabelle. Yes.
Okay, thank you.
Basically, when you're using Fuliza, it's like an overdraft. Fuliza is an overdraft. An example of an overdraft, the one you get from the bank. If you want to pay for something at the bank, assuming it's 100,000, and you only have 60,000, the bank can give you an overdraft of 40,000. Then you can be able to cover the 100,000. Fuliza is the same. So when you go shopping, when you go to the supermarket, you've bought products, assuming they are coming to about 6,000, and you only have 4,000 on your phone. So if you have the limit of 2,000 in your Fuliza, you'll be able to pay that. So if you pay that 2,000 from Fuliza, then the next time you load money, the Fuliza will be taken away. Okay? So you've already started building a good book for yourself because you were given 2,000 and then you paid back. Okay? As per the other person who transacts a lot of money, but they never borrow or they never do an overdraft. So for them, they're not borrowers. They've never borrowed. So Fuliza can be able to notice that you always borrow and you pay. You borrow and you pay. And I think that is one of the biggest invention that came that has helped people from the bottom down. Because if I go to the supermarket, I don't have enough money to pay for my goods. I'm not scared because I know I can Fuliza. So it actually makes life easy and you can be able to move on with life without getting scared. Assuming you want to come to such an event, maybe you didn't have money. You can still Fuliza and get here. But as long as you're able to pay on time, you'll have a good credit score and things will move okay. Yeah.
Thank you so much for the question, and thanks, Annabelle, for the feedback. I think one thing I'm proud of Safaricom is that so many people are on CRB, so they don't really check much on CRB when they're giving you loans. And it's a plus for us in that part. So forgive me, I won't take more questions. I'd like to conclude it from here. And I'd like to thank my brilliant panel and to everyone in the room for the sacrifice during lunch break. You showed up with clarity, curiosity, and care. Let's keep the inclusivity moving and definitely looking forward to more of this kind. Thank you so much.
Thank you very much, Kiza.
Thank you.
Which one? All the speakers? All the speakers. Okay.
All right.
Okay.
Right. A good one. So, ladies and gentlemen, whilst they're doing this, I'll also give everybody that opportunity and chance before we go for our lunch break. So please, whilst we're getting ready to go for the lunch break, if you would mind, kindly join us on stage here. Let's take one big group picture before we go for our lunch break. Thank you very much. And whilst we're done with the picture, we go for our lunch break, which is going to be for 30 minutes. So please, the clock starts now. So we take 2 minutes to take a picture and we use 28 minutes outside. Thank you.